Hello everyone, Joe Vitale with American Retirement Advisors here with a weekly market update. Stocks, all eyes were on last Thursday's arrival of the China trade delegation in Washington, D.C., as the U.S. had threatened additional tariffs without intervention to go into effect this Tuesday. Surprisingly, a deal was struck on Friday for China to buy $50 billion of U.S. agricultural products, while the U.S. suspends tariff hike planned for this week on $250 billion worth of China goods. After declines in the early part of the week, the benchmark for the S&P rose 1.2% on Friday and was up 0.66 for the week. The Russell also increased 0.77 and the NASDAQ up 0.94. Overseas, the developed markets index, the IFA gained 2.31%, while the emerging markets rose 1.53. In the U.S., the materials and industrial sectors led the markets, while utilities and consumer staples were the poorest performers. The last week's CPI reading gives us insight into the upcoming Federal Reserve interest rate decision. The core inflation will rise approximately 1.7% year over year, sufficiently below the Fed's 2% target to be an excuse for easing interest rates. However, the Fed would likely have cut rates at the end of October anyway if inflation hadn't firmed more. Due to continuing the global economic weakness, the Fed cited its last rate decision. For the week's interest rate rose, and the values in the benchmark of the 10-year Treasury bond rate up 24 basis points to 1.76%. So on commodities, the prospects for improved global trade. Gold declined 1.33%, and the stock dropped 3.23% last week of their stock. But the precious metal portfolio holdings are still up 15% and 28% respectively for the year. Labor market improved in early October with a report of initial claims for unemployment. This measure dropped to 210,000, about 4% below expectations. Considered to be the measure, the labor markets rose 1,000 to 213,750 last week. Company news: ConocoPhillips, G50 Energy Holding announced a 38% dividend boost and a $3 billion buyback program. The buyback plan will when fully executed, could reduce shares outstanding by 5%. And that, of course, the new rate is 2.98% dividend, which rose 5.4% for the week, the stock itself. When you look at Parsley Energy, PE, which is an energy sector focus and a G33 holding, it announced the acquisition of Jagged Peak Energy in an all-stock deal valued at $2.3 billion. Parsley Management expects the deal to be immediately additive to cash flow and return on capital. Shares were up 4.5% for the week. If you have any questions on recent market news and how it might affect your portfolio, give us a call at 855-756-5700.